We wish to provide you a sneak peek at a future that has the potential to completely change a sector. Imagine a Tesla that functions with the stealth and agility of a private company, free from the constraints of the open market. A name who is famous with financial acumen in the electric vehicle industry, Gerber, has set off a flurry of conjecture with his audacious forecast that Tesla may go private in less than 2 years. We'll explore this intriguing option in today's episode. What does it signify for you as an investor, Elon Musk, and Tesla? We'll analyze the ramifications, difficulties, and possible course of this significant change. We'll look at everything from the boardrooms to the trading floors, the svelte Tesla interiors to the busy production floors. So have a seat, then click the like and subscribe buttons. This is Tesla Stock News, and this is where the narrative about Tesla possibly going private starts. The industry leader in electric vehicles, Tesla, is on the verge of making a stunning move away from public markets. Finance expert Ross Gerber interprets the clues that point to this industrial titan's bright private future. The fundamental underpinnings of Wall Street might be shaken by such a move. Now consider this. Tesla is a name associated with leadership and innovation in the electric car sector. But let us consider the significance of their rise from less than 100,000 cars annually to around 2 million. This is a business that is expanding rapidly, isn't it? And now for a query for you. At $200, is Tesla a wise investment? Explore this question with us. Former Tesla board member Steve Wesley is still upbeat about the company's prospects in the long run. His faith is based on Tesla's proven ability to innovate and disrupt markets, especially in the electric vehicle industry. Wesley remains bullish even in the face of a weak third quarter, which frequently causes investors and analysts to get concerned. In the third quarter, Tesla announced a deceleration in both production and delivery, but this was a calculated step, not just a case of underperformance during this phase. Tesla has announced its intention to temporarily halt operations. This slowdown had two purposes. First, it improved production facilities' efficiency, and second, it gave its well-liked Model 3 car a major makeover. Efficiency improvements are especially important in the quickly changing EV industry. It needs continuous innovation in production procedures as well as product design to keep a competitive edge. Tesla wants to lower costs, speed up production, and raise overall product quality through increasing manufacturing efficiency. These are critical components for long-term success in the automotive sector. One of Tesla's most important products, the Model 3, received a makeover that shows the firm is dedicated to constant development. Due to its lower price point when compared to Tesla's previous models, the Model 3 has been a major sales engine for the company, drawing interest from a wide range of consumers. The goal of this car's upgrade is probably to increase its appeal even more by adding modern technologies and taking consumer input into account. Wesley's optimistic assessment of Tesla is bolstered by the company's track record of surmounting obstacles and emerging stronger. Whether navigating regulatory obstacles, supply chain problems, or production bottlenecks, Tesla has continuously shown tenacity and adaptation. With its flexibility and well-defined transportation ambition, Tesla is well-positioned for sustained growth. It's important to keep a careful eye on the predicted rebound in Q4. But there's still more. Unexpected prediction from Ross Gerber. Tesla will go private in 2 years. A step that might completely change the face of Wall Street. The scenario is prepared for a comprehensive discussion of Tesla, covering their most recent earnings reports, margin issues, and much more. Steve Wesley of the Wesley Group and HMDB of Gerber Kawasaki Wealth and Investment Management are joining us. Let us start by posing a direct query to our audience. Is Tesla a prudent purchase at $200 right now? HMDB expresses optimism for Tesla's future course in spite of the Cybertruck's present obstacles. Tesla has unheard of ambitions to completely transform the auto industry. When the price of the stock declines, isn't it a good idea to build or maintain your stake in Tesla? With its cutting-edge appearance and impressive performance claims, the Cybertruck has attracted a lot of attention, but has also encountered several challenges. These difficulties include everything from production holdups to worries about the market's acceptance of its unique design. Notwithstanding these problems, HMDB's optimism emphasizes a key feature of Tesla's strategy: its readiness to push limits and rewrite automotive regulations. Unprecedented in its ambition, Tesla aims to transform the automotive industry. From its emphasis on electric vehicles to its handling of software upgrades and autonomous driving capabilities to its investigation of renewable energy integration, the corporation has continuously worked to challenge the existing quo. Tesla has distinguished itself from other traditional manufacturers and become a pioneer in the shift to sustainable transportation because to its unwavering pursuit of innovation. Given this, HMDB proposes that there may be strategic opportunities for investors during times when Tesla's stock declines. Variations in the stock market are normal, particularly for a business like Tesla that is so active and well-known. These declines may not always be indicative of a structural flaw in the company's long-term prospects, but rather are the result of the market's temporary responses to particular difficulties or general economic circumstances. Declines in the stock price may present a more accessible entry point, or a chance for investors who believe in Tesla's vision and its ability to carry it out to solidify their position in the firm. This viewpoint, which emphasizes the company's ability to expand and dominate in a future when electric vehicles and sustainable energy are increasingly central, is especially relevant for individuals who take a long-term investment approach. Now that we are focusing on the most recent report, there appears to be cause for alarm. Elon Musk, who is often a man of boundless energy, seemed a little worn out and discouraged, especially in light of the difficulties with the Cybertruck. Is this a mirror of the larger problems at Tesla, or is it just a way to distract attention from other problems like Musk's use of Twitter? Elon Musk, the visionary CEO of Tesla, ignited the financial world in 2018 with a tweet proposing to take Tesla private at $420 a share. This announcement caused market officials to closely monitor the flurry of speculation that followed. Even though the concept finally faded, many people continue to wonder if it may come again. The issue that now has to be answered is Tesla about to make a radical change that will change the fundamental nature of its business? This could be a turning point in Tesla's history, so keep an eye out. Just consider the impact, a change that might completely alter Tesla's future. With the constant demands of the stock market removed, Tesla would be able to make decisions with amazing quickness. Strong advocate for Tesla, Gerber, thinks that the company could be protected from short-term market swings and the ongoing pressure to meet quarterly targets through privatization. This opinion is founded on a number of important factors regarding the characteristics of public markets and Tesla's distinct place within them. First of all, publicly traded corporations are inevitably vulnerable to the whims and vagaries of the stock market. These swings frequently represent short-term thinking and can be impacted by a wide range of factors, including investor sentiment and larger economic trends. For a business like Tesla, which leads the way in technological innovation and environmentally friendly energy, these brief fluctuations in the market can be very erratic. Historically, news, speculation, and investor mood have caused large fluctuations in Tesla's stock price that are not always indicative of the company's real performance or long-term prospects. According to Gerber, Tesla could be able to shield itself from the short-term dynamics of the market by going private. Unaffected by stock price fluctuations, Tesla could concentrate more on its long-term strategic objectives, like increasing production, improving technology, and growing its market presence in the absence of the media and public market investors' constant scrutiny. Public corporations are also required to report their financial performance on a quarterly basis. Shareholders, analysts, and the media extensively examine these reports, which frequently causes a concentration on immediate results rather than long-term strategic planning. The requirement to demonstrate steady quarterly growth might be difficult for a forward-thinking business like Tesla, which is continuously spending in R&D, building out its infrastructure, and looking into new market prospects. It may also not always line up with its long-term innovation objectives. According to Gerber, Tesla might function less focused on meeting these quarterly targets in a private organization. This could make it possible for the business to commit resources and take decisions that, while they might not have an immediate financial impact, are essential to sustaining long-term growth and preserving its competitive advantage. Publicly traded corporations are usually closely watched, with analysts and shareholders closely examining each action. But Tesla could avoid all of this by going private. What further benefits, though, may this shift offer? How might it change Tesla's stock price and help investors? Tesla can now concentrate on long-term strategic objectives and developments thanks to privatization. Not only would it reduce regulatory requirements, but it would also free Tesla from the erratic swings of the short-term stock market, freeing up additional funds for R&D. Furthermore, Tesla could make more strategic decisions quickly and secretly as a private company, which would give them a significant advantage in the cutthroat EV industry. Activist investors frequently pressure publicly traded corporations to make decisions that might not be in line with the company's long-term goals. Tesla would be shielded from these distractions by privatization. Furthermore, Tesla wouldn't have to constantly please public investors by securing sizable funds for expansion and innovation from institutions or private investors. Let's now examine the possible long-term effects on Tesla's shares. Going private will help Tesla focus on long-term goals free from the distraction of daily price fluctuations by protecting its stock from speculative trading and short-term market volatility. Elon Musk and other members of Tesla's leadership would have more discretion and freedom to make decisions if the company were to be privatized. This freedom from market reactions could allow for the making of strategic decisions. Going private might be a game changer for Tesla since it will allow for more strategic freedom, less market pressure, and targeted long-term growth. Being a leader in innovation, Tesla must make a crucial choice. Should it stay publicly traded or go private? Tesla would not have to deal with the strict quarterly reporting requirements that public corporations must meet if it were a private company. This change could free the business from the constant strain of short-term performance measurements and open the door for a longer-term strategy that is more long-term and imaginative. Although being publicly traded certainly increases Tesla's visibility to investors and attracts a lot of attention from financial analysts, privatization should facilitate a more seamless implementation of its strategic plans and groundbreaking breakthroughs. Additionally, it might protect the business from conjecture and market gossip, which frequently affect stock values. Furthermore, lower regulatory and compliance requirements may result in lower operating costs and a more efficient business, which would ultimately benefit the shareholders. Frequently referred to be the most heavily shorted stock globally, Tesla is continuously facing opposition from those who believe its price is too high. Some even see the corporation as a bubble ready to burst and forecast a cataclysmic fall to zero. Short sellers' constant pressure creates an uncomfortable atmosphere for Tesla, strengthening the argument for privatization. Imagine Tesla, free from the scrutiny of the public market, carrying on with its bold projects, from taking over space to reinventing electric transportation. By selling private shares, privatization would make it possible to raise a sizable sum of money that could be used to further Tesla's innovative concepts through more investigation, development, and application. But there are obstacles in the way of privatization. The difficulties of planning a buyout and overseeing a seamless transfer are daunting. Furthermore, Tesla needs to make sure that all of its shareholders are treated fairly while continuing to push on with its goal of bringing about the global switch to sustainable energy. Going private appears to have more benefits than drawbacks. If Tesla is able to successfully complete this transformation, the company's direction may undergo a significant change. However, the idea of privatization is still purely theoretical at this point. But considering Elon Musk's proclivity for non-traditional thinking, the concept might come up again in the changing context of Tesla and the electric vehicle market. The video for today has now come to an end, but now it's your turn, dear viewers. What do you think will happen to Tesla? Do you believe that Tesla's full potential can be realized through privatization? Regarding the future of sustainable energy and transportation, what part do you think Tesla will play? Kindly leave your remarks in the space provided below.